A trader is a business who buys with an aim to resell to make a profit. Now, if the person is not buying to resell, he can manufacture the goods, that is, make or produce the goods to sell. So, if he is doing that, we will have to prepare a manufacturing account. Now, the manufacturing account shows how much it costs the business to make or produce the goods produced in that financial year. So you will only have to prepare a manufacturing account if this person is a manufacturer or a producer. Let's go through some of the terms that you will see in preparing a manufacturing account. Now, direct material is raw materials that is required to make the finished goods. Direct labor is the cost of the wages and salaries of people who are employed in the factory making the goods. Direct expenses consist of any expense which can be directly linked with the product being manufactured, meaning more expenses will be incurred if more goods are produced. Factory overheads are all costs involved in operating the factory which cannot be directly linked to the goods being produced, such as rent and rates, because rent and rates will not change even though your production change, especially in the short run. In the long run, however, all expenses will change. Machinery repairs. Machinery repairs do not depend on the number of products that you produce. Factory indirect wages. This will include salary paid to supervisor. Depreciation of factory machinery. Again, you depreciate your factory machinery according to whatever method that you'll be using. For example, straight line method or reducing balance method. So it will not depend on your products that you produce. Work in progress means that work that are partly made but which are not yet completed. Say, for example, if you are making teddy bears, you have part of your teddy bears all produced, but you have not put it together, so you are not able to sell your teddy bears. You can't sell teddy bears without heads. You can't sell teddy bears without arms or limbs or legs. So therefore, it's work in progress. It's not completed yet. Now, let's take a look, all right, at what this involves. Now, the first one here, okay, would be your direct cost. Let's say our business involves making cakes to sell. And I know making one cake, your direct cost per cake will have materials of sugar, 100 gram, butter of 100 gram, flour of 100 gram, and 2 eggs. And the cost of all these 4 ingredients will be $5. And you are no good at making cakes, so you employ somebody else to make your cakes for you. And for each cake you make or you produce, the person you employ will charge you $2 per cake. So if you make 2 cakes, your direct labor will be $4. So this is direct labor per cake, that is $2 per cake. And because you have got such small oven, it's only good for 1 cake. And you know for sure from reading your meter that each time you bake a cake, it will cost you $1 to bake your cake. So your direct heating is $1. So if you make 2 cakes, you have to pay $2 to make your cake. So this is the direct cost per cake for making a cake. $5 of direct materials, your ingredients, the direct labor of $2 per cake, and baking, that's your direct expenses of $1. Together, it makes $8 per cake. Now, other than that, you have got a very small kitchen, all right, and because your kitchen is very dark, you need to light it up the whole day. And you have worked it out that in order to light your kitchen each day is $10. So therefore, all right, it is $10 per day, regardless of how many cakes you make. Even if you do not make any cake for the day, it'll cost you $10. You bake one cake for the day, it'll cost you $10. You bake 20 cakes for the day, it'll cost you $10 as well. It's direct, indirect costs because it does not vary, it does not change with your number of cakes that you bake. Now again, you employ somebody to clean your kitchen at the end of the day. So this person costs you $20. Again, it doesn't matter whether you make 1 cake, 2 cakes, 10 cakes, 20 cakes, 100 cakes. It still costs $20 per day to clean up your kitchen. So here, your indirect cost for the day, meaning it will not vary with the number of cake that you make, is $30 per day. Okay, now let's take a look at the next one here. All right. So here, in order to make 1 cake per day, your indirect cost, as we can see, all right, your direct cost per day is $8. So your, mistake here, your direct cost per day is $8. Your indirect cost is $30. Yep, $30. So the cost of producing 1 cake per day, if you make 1 cake for that day, it will be $38. Now the total cost of producing 10 cakes per day, all right, if you make 10 cakes per day, your indirect cost will be 10 cakes multiplied by, all right, $8 per cake, $8 per cake. So that's how you arrive at $80. Your indirect cost will not change whether you make 1 cake or 2 cakes or 10 cakes in this case. It will not change. It will stay the same in the short run. So therefore, direct cost of 80, indirect cost of 30, in total, it costs you $110 to make 10 cakes for the day. Now, if you are going to produce 20 cakes per day, the total cost of producing 20 cakes per day would then be your, again, direct cost per day will be, now you're making 20 cakes at $8 each. So it costs you $160. Again, your indirect cost will not change. Therefore, it still stays at $30. Now, the total cost of producing 20 cakes will then be $190. So let's take a look at this now. So now your direct material, and your direct labor, and your direct expenses. All this is your prime cost. It is actually your variable cost, or you can call it your direct cost. But accounting terms, when you're preparing your manufacturing account, we call it the prime cost. Now here, this is your factory overheads. Factory overheads here is your indirect costs. This is your indirect cost. Or you can also know it as fixed cost, meaning it will not change. It's fixed in the short run. So putting a prime cost together with a factory overheads, now you arrive at your cost of production, or your cost of manufacturing. Now, again, let's say if you're making your cake and you have not iced it, so it's not ready for sale. So therefore, it will then be your work in progress, incomplete product. You cannot sell it. So if that is the case, I have incomplete products at the end of the day, right? I'm not able to sell it. I have to take it out because I can't sell it. All right, so you minus your closing work in progress. So the next day when you come back to your kitchen or to your factory, and therefore you continue to ice it and it's ready for sale. So it's your opening work in progress. So it's going to be sold during that day, so you need to add it to your cost of production. So your cost of production, in this case, if you have to adjust it, it's not known as cost of production just yet, because you have to adjust for opening work in progress and you have to adjust for closing work in progress. And then this will now be your adjusted cost of production. Alright, so this is if you do not have work in progress. And if you do have work in progress, you need to adjust for opening work in progress and closing work in progress. You get your cost of production. So now, if you're going to put it all together into your account, yep. So this is your manufacturing format. You start off with your raw materials. And again, with raw materials, if I'm going to make my cake, all right, and I need 100 grams of sugar, 100 grams of butter, 100 grams of flour, and 2 eggs. I cannot go to the shop and buy 100 grams of sugar, 100 grams of butter, 100 grams of flour, and 2 eggs. I probably would have to buy a kilo of sugar, a kilo of butter, a kilo of flour, and a dozen of eggs. So that would be your purchases. But if you have left over from your last period, then that will be opening inventory of your raw materials at the start of the year. So now you need to add these two together. But then again, if you have purchases, obviously, the only thing that you purchase are not completed goods, but raw materials. So if you're not happy with your purchase of raw materials, you can always return it. All right, you will then have to deduct your purchases returns from your purchases. And likewise, the same as your inventory of completed goods, if you have carriage inwards, you need to bring your goods into the factory. In this case, you need to bring the raw materials into your factory. You have to pay for carriage. This is known as carriage inwards. So therefore, carriage inwards will increase the cost of your purchases. And if there's any inventory left at the end of the trading period, you have your closing inventory. It has not been used up, so that's why you have to deduct it from your cost of raw materials available to use. Now after that, now all this will give you your cost of raw material used. And don't forget, this is only raw materials. We still have our other direct expenses, in this case your direct labor, and your direct expenses, any type of direct expenses. Another direct expenses could be your royalties, because royalties you pay according to the number of units that you produce. So the more units of products you produce, the more royalties you have to pay. Now, so all these direct costs, your raw materials, your direct labor, your direct expenses, will give you prime costs. It give you prime costs. Direct materials will give you prime costs. Until here. And now, other than your variable costs, you need to have your factory overhead expenses, your fixed costs, your indirect costs. cost that will be incurred in your factory, but is not affected by the number of units that you produce. For example, you have got your factory lighting, your factory rent, depreciation of your machinery repairs, your supervisor's salaries, your indirect labor, maybe the cleaning of your factory, and your insurance for your plant and machinery. All this will not vary according to your number of units that you produce. So now I've got my prime cost, I've got my factory overheads, all right? And if there's no work in progress, then now you've got your cost of goods produced. But again, if you have goods that's half completed at the start and at the end, so now those at the start of the period will be completed during the year. That's why it would be ready for sale at the end. Therefore, you add. Those incomplete at the end of the period is not ready to be sold. Therefore, you need to minus it. Now we'll get your cost of goods manufactured or cost of goods produced. Okay. Now, after preparing your manufacturing account, you go on to prepare your income statement, right? You prepare your income statement as per usual, no change, except instead of buying your completed goods to sell, you do not buy your goods. Now you will, instead of purchases, you have got your cost of goods manufactured. So there will not be purchases in your income statement. Instead, you would have your cost of goods manufactured. Because you are not buying to resell, but you're manufacturing to resell. And now, after your income statement, you go on to prepare your statement of financial position. The only difference in your statement of financial position here, this is an extract, all right, is under your heading, current assets. Now, you have three types of inventory: your raw materials, your work in progress, and your finished goods. All this still belongs to you, whether it's raw materials, whether it's work in progress, whether it's finished goods. It's unsold, they are assets. It's the inventory, just different types of inventory. So statement of financial position will be exactly the same as that for any other business. Now, again, the next one here, your question, this seldom comes out in the exam, but when it does come out, all right, you should be able to work it out. Now, the unit cost here, where a manufacturer makes only one identical product, only one type of product, the cost of making one unit can be found. So unit cost, of course, equals to cost of goods manufactured divided by the number of units manufactured. So here, if I'm going to use this one here, all right, say for example, I'm going to look for the unit cost of producing one cake. And obviously, all right, my total cost of goods, cakes manufactured, all right, total cost is 38. This is my cost of goods manufactured, cost of my cakes manufactured. So therefore, what is my unit cost? So if I have to write it, then it would be unit cost equals to, all right, 38. How many cakes did I produce? I only produced one cake. So my unit cost here is $38. And my unit cost